Hello traders, Gary Wagner here, just about 3 o'clock in Honolulu, 8 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, January 19th, 2018, and this is the Daily Report for Gold and Silver, our weekend review. And what a week we have witnessed in the market. We've had some real action in the precious metals, real action in equities and the dollar. Now, gold did close up today, up about $4, $3.90 to be exact, 1331.10. The recent lows have been as low as 1326, 1325. Critically important because our current trade has a stop at 1320. Of course, we'll talk about that in detail. Silver managed to eke back up over $17, 1702, and the US dollar did close fractionally higher on the day at 90.48. But as you'll see in the video, I think we broke through a major support level earlier this week. U.S. equities, although they've slowed down on their upward ascent, they did close higher, and the Dow closed above 26,000 for the first time in history earlier this week and closed at 26,071 on the close today. It was able to maintain that. Same cannot be said for the cryptocurrency Bitcoin, which continues to run into a lot of headwinds and trading to lower pricing. It actually hit the lowest low since futures contracts opened, just above 9,000. It did close lower on the day, off about 400. CBOE at 10,710, down 345, and the CME closed at 11,430, down 385. Traders, this has been a most interesting week, with gold closing up today about $3.90, 1331. But what is most interesting as far as I'm concerned is that we have seen some real congestion coming into the market since a pretty nice and dramatic rise that occurred on Monday of this week, and that would be this long green candle. And effectively, that particular day was a day in which we saw gold prices jump above 1325, which up until that point had been a definitive resistance area in the market. No doubt, we can see that the price jumps right through that particular price point. But immediately following this move here, we saw some real uncertainty come into the market, because what we got was a series of doji candles, and that would be these three candles right here. And a doji is, simply put, a market session in which the price opens and closes at the same price point, which is saying that we went from an extremely bullish overall market sentiment to that of undecided. Because what happens in a doji is neither the bulls nor the bears have the ability to move the market in their direction and keep it in their direction. In other words, we have these rather large ranges where the bears absolutely had control of the market, for example, right in here as they brought the price point down, but this was perceived by the bulls as an opportunity to bid the market back up, and that's why you get an effective close that comes in where the market opened at. And now that happened 3 days in a row. Yesterday I talked about the fact that it gave us a variation off of a pattern called a tri-star top. And it's similar to what we saw on the bottom of this market, where we had this tri-star bottom. A tri-star is simply where you've got three small-bodied candles that run in a configuration something like that of a triangle. What I mean by that is we can look at the lows and the highs, and we can see that we really get this triangle. Now, in this particular case, you would obviously need to see follow-through, and follow-through for a bearish pattern or a key reversal pattern is pretty simple. This candle right here would have had to have been red with a lower low and a lower high, and that would confirm this tri-star top. But rather than that, we had some real buying coming into the market, and even with a marginally higher dollar, you can see that they were able to bid gold up. The key is this: we are currently long at 1265. We've been long for quite some time. In fact, since about the middle of December, we've consistently raised our stops. Our stops are currently sitting at 1320. We've identified this as a level of support, and I believe it continues to be an effective spot to maintain our stop. Therefore, my recommendation is to maintain your current long position at 1265, maintain your current stop at 1320. And traders, as far as silver goes, you know that over the last couple of weeks, I have noticed an extreme disconnect between the way that silver has been trading and the way that gold has been trading. The key is that gold began to move up and silver actually weakened and then started to trade sideways, currently trading at $17.03. We did pull profits on our silver trade at about $17. Market did go a little bit higher, but is right back to that area. I do recommend that we remain neutral with no active trades in silver, at least for the immediate future. And traders, as you know, recent upside moves in the precious metals markets have been pretty much predicated on dollar weakness. We can see that after reaching these tops at 103, this of course is back at the beginning of 2017, we have seen the dollar lose dramatic value, actually losing about 12% that year alone. It had a little spike up to just above 94, but traders, we're at a very critical area because one, the dollar has been under pressure, no doubt about that. But on a long-term basis, we have broken through this week and last week through what I believe to be an extremely critical area, and that's the area of 91.27. It is a 38% retracement. And of course, this retracement is based on a very, very long-term study where we begin in 2008 with the dollar index at 70 up until these highs at 103. And that intersection, so to speak, between the highs and the lows at a 38% retracement comes right in at the area it broke through. Now, if in fact the market continues to drop, in other words, if we continue to see dollar weakness, which I truly believe we will, the next real level on a technical basis of support doesn't come in till about 89. Of course, that's based upon these tops right here. It's not a Fibonacci-based number, but rather a number based on former levels of resistance, because resistance and support are part and parcel of the same thing. One man's ceiling is another man's floor. We're at a very precarious position because now that we are at 90.48, it's not that far for it to travel to about 89. Personally, that's where I think it's headed. I think we'll see more dollar weakness in the month ahead. This week was also a very important week for U.S. equities, with equities closing at new all-time record highs. Today, for example, a new record high in the S&P 500. That's the chart we're looking at, a weekly chart. Dow Jones Industrial Average did not make a new record high today, but broke through 26,000 earlier this week. And however you feel about the U.S. equities markets, whether you think it's due for a pullback or a correction, there is one irrefutable fact, and that is since 2009, after the market really crashed following the 2008 recession, this market has pretty much been on a linear line up, and every correction that it's had has been just a very, very soft retracement. The 10 or 20% corrections that were evident, for example, between 2007 and 2009, they are not emerging. At some point, this market will have a deep correction. When that will be is anyone's guess. And traders, lastly, let's take a look at Bitcoin. Bitcoin has been a roller coaster ride like none other that I've seen. First day of trading on the futures market. This is the CBOE's futures contract. It started at 15,000. Within a few days, it had a dramatic rise above 20,000, only to fall from grace and to move to 11,000. It did trade sideways, attempting to form some sort of a base, really beginning of 2018. And from about the last week, it has dropped back to these lows and actually making a new low this week, trading as low as approximately $9,000 per Bitcoin. Bitcoin did close lower today at 10,710. The key is it is attempting to find some value, which I believe is an extremely difficult thing to do because the underlying technology is the asset, not the Bitcoin itself. Traders, as you know, the techniques that we utilize here at the Gold Forecast are techniques to try to capture long-term trends when they develop. We are never certain as to when a trend will actually appear, and an extended trend will be evident in the market. But we have a technique that allows us to maximize on those moves when they do happen. And that's exactly the case now, because we have been long gold at 1265, which was at the middle of December. We are now getting into the middle of January and are still long our position. From 65 to current pricing, which is 31, is a pretty good rise. And so, as I said during the video, I want our subscribers to maintain their current long positions and to maintain their stops. And I also want to recommend that those YouTube subscribers that have been watching us on the weekends diligently, week in and week out, consider our trial. It's free for 2 weeks. It allows you to get the report on a daily basis and profit when we profit. This has been Gary Wagner, wishing you as always good trading. Have a great weekend. We'll talk to you on Monday. Bye-bye.